that means we have 5 days to have very current and very relevant business conversations on Business Morning. Good morning, I'm Ini John Rekwa, and invite you to this 55 minutes journey that starts today. We begin with money, very important. It's 15 days to the expiration of the old Naira notes. The CBN had set January the 31st as the last day that the old notes will be recognized as legal tender. The Central Bank of Nigeria has asked banks to stop dispensing the old Naira note as from Friday, last week, Friday the 13th, as the regulator insists that there will be no shift in the deadline for Nigerians to swap their old notes with the new one. So personally, I had my first real interaction with the notes over the weekend with a neighborhood store. I was able to get 500 Naira, the new one, in the midst of some other change that I collected. So we invite you to share your new Naira note experience with us on Business Morning at channelstv.com. Send us your experience so far with the new Naira note at Business Morning. Send a mail, please. Business Morning at channelstv.com. We'd like to get that mail, and we'll be sharing it as we do the countdown to that 31st of January, when the old note is supposed to stop being recognized as a legal tender. So send us your new Naira note experience at Business Morning at channelstv.com. All right, moving on now, but we're still within the CBN. The National Domestic Card Scheme by the Central Bank of Nigeria is billed to commence today, the 16th of January 2023. The CBN, in partnership with the Nigeria Interbank Settlement System, had launched this or announced this a couple of months ago, about October or so last year. A statement by the CBN spokesperson, Osita Wasinobi, says that the scheme would accelerate financial inclusion and deliver lower cost payment services that are more accessible and affordable for Nigerians. By launching the scheme, the CBN said Nigeria would join countries like India, Turkey, China, and Brazil, who've used this means to service the underbanked areas in the jurisdiction. Well, we're still awaiting how this will work, and the CBN has promised us that we will get a resource person to have more details. In fact, later this afternoon, we expect to get details of how it will work, and then we'll certainly have conversations on that subsequently here on Business Morning. Well, to other issues now, the President, Muhammadu Buhari, has been commended for withholding his assent to the 2022 finance bill. We've been discussing this and some of those adjustments. Well, this, according to the Chief Executive Officer of Center for Promotion of Private Enterprises, Dr. Muda Yusuf, will allow for broader consultation, participation, and inclusion in the legislative process. Dr. Yusuf is concerned that companies in the service sector are already paying huge taxes in the form of company tax, which is currently at 30%. And so the adjustment made on tertiary education tax at 2.5%, NITDA levy at 1%, the SENI levy at 0.25%, police trust fund levy at 0.05%, and withholding tax on profit distribution at 10% will affect the contribution of the sector to the GDP. And just when you thought inflation was hitting everyone, Oxfam reports that billionaire fortunes are increasing. In fact, they increased by $2.7 billion every day, as at least 1.7 billion workers now live in countries, including Nigeria, where inflation outpaces wages. 95 food and energy corporations have more than doubled their profits in 2022. They made $306 billion in windfall profit and paid out $257 billion. That's 84% of that to rich shareholders. Well, a tax of up to 5% on the world's multi-millionaires and billionaires could raise $1.7 trillion a year, and that's enough to lift 2 billion people out of poverty. Who will tax this 1%? That's the big question that's yet to be answered. Let's take a breather now. When we come back, we'll delve into today's conversations here on Business Morning. Just stay with us. still watching Business Morning here on Channels Television. Let's look at the forecast for Nigeria. Not looking so good at all when we see the different forecasts. I think the highest we've had has been from the World Bank, which is about 3%. We have 2.7%, and, you know, not looking good for the economic forecast for the country for 2023. And I guess the factors are very glaring. They're not hidden in any way. We see fuel subsidy. We see the fuel queue still there, you know, months after it started, in spite of the promises of the NNPC Limited. We still see those fuel queues. We hear the promise of subsidy being removed by middle of this year. And a whole lot, the issue of debt is still there. And then we just talked about the issue of the 2022 finance bill, all glaring to everyone. Let's find out how this will affect us. Talking about the forecast with Dr. Biodun Adedipe, Chief Consultant with B. Adedipe Associates Limited. Dr. Adedipe, good morning. Thank you so much for your time this morning.
Good morning, Bini. Thank you for having me here.
Great. So I know you've also seen all the forecasts from 2.9% to 2.7% to 3%, which are, but we have the federal government at 3.75%. That's like the highest we've seen, and people have asked how we will achieve that. But first of all, let's get your thoughts with all of the downgrades that have been hitting, not just Nigeria, to be fair. I think everybody has been hit by it. But how does it come across to you? Is it a scary picture? Is it something we can escape? Or is it going to be worse than even the forecasts?
Thank you so very much. Now, my own perspective is that in 2023, and that is a view we hold very strongly in BA Consult, that the Nigerian economy is likely to grow at between 3.27 and 3.32%. And that is, of course, coming from a number of factors. As rightly said, yes, this is not peculiar to Nigeria. Globally, like IMF said, okay, we expect a third of countries around the world to go into recession in 2023. But basically for us, the perspective is what are the major causes? What will likely make economies to tumble into recession? We put them in 5 categories. First, the Ukraine war, which has proven clearly impacts every country in the world in terms of the nature of what they supply to the world and how that supply chain tanked and affected those commodities and therefore in turn affected the rest of us. The second major issue is to do with the pandemic, which in reality is also affecting the second largest economy in the world. If you go by the common measure of GDP, now that is the Chinese economy, which of course the own government also responded to. That's a major issue. Then, of course, we look also at the issue of what I simply put as macroeconomic stability, or let me call it volatility, which is affecting countries all around the world. You know, quickly in my mind, I said, look, let's take a look at the U.S. economy. There's some good news there, but there's a very, very rife expectation that the U.S. economy, the largest in the world, will tumble into recession. And that, by all means, will affect the rest of us anyway, given the fact that its currency, the US dollar, is the major trading currency around the world and major reserve currency for most countries. But there is also some glitter of hope. That is where I'm coming from. The inflation rate in the US, the consumer price inflation, improved by 0.1% in December 2022. And that was the first time that will happen since May 2020. So that is some, silver lining. Then secondly, if you take the British economy among the top 6, all right, you find also that the British economy escaped recession in November, growing by 0.1% between October and November 2022. So which means by the time you profile the top 7, top 10, top 20, by the time you take top 30, you find Nigeria in that list. Okay? The fourth major issue is social divisiveness, which also is a major challenge around the world. As we speak right now, the major conversation in the US is that if the Congress does not increase the borrowing limit for the US government from $31.4 trillion, where it is now, by June this year, the US government will default in its debt obligation. So that also has implications for us. But the problem for the US now is that they have a divided house. So the expectation is that the Republicans are unlikely to allow that to happen. So social divisiveness is playing out there. Of course, for Nigeria, it's a major issue in an election year. Then you look around the world, take, for example, an extreme case of Argentina, where inflation rate in December 2020 was 95%. Okay? So you see that challenge all around the world. The fifth major issue is climate change. All right? So when you put all of these global disruptions into the basket, it brings you back to what you may expect. So the question is, how will all of this impact Nigeria? And that's where the issue is. So, and of course, you look at that, this has been the policy direction. I'm happy that the government took a position that the Finance Act, let me call it bill for now, 2022, President says, I'm not going to assent to it until the major issues that business community and Nigerians in general and stakeholders are expressing, concerns about are resolved, which is very good. So now that is one of the major responses that can get our economy in the right direction. So the principal thing here for me, and that is what either leads an economy into recession or makes it to get out. I call it confidence. The moment economic actors lose confidence, not only in the economy itself, but in the response of its policymaker, then the economy inevitably and also inescapably will go into recession. Until that confidence returns, that is when the economy will go in a part of recovery. So for me, this year, therefore, given elections and how all these disruptions will play out and affect Nigeria, I don't see us tumbling into less than 3% growth rate in 2023. That is where we are coming from. So the question now is, how are we going to go? Election comes February. By May, hopefully, we have a new government in office end of May. And of course, the second half year, typically and historically, is where Nigerian economy grows, strongly. So by then, you have a new government in office. And if the new government also goes with speed to put its cabinet together, they will likely see our economy not go down the way of less than 3% growth rate this year.
So, Dr. Adenike, from your perspective now, we should be able to overcome some of these risks that the World Economic Forum listed: inflation, cost of living, debt, security, and then we should be able to escape recession in 2023.
That is my own strong view. And that, of course, is coming from the background of what I said earlier. And then look at also the trajectory of the Nigerian economy. From January to September 2022, our GDP growth rate averaged 2.97%. So if you look also historically, fourth quarter is always the fastest growth we experience in GDP in Nigeria. If that plays out, then we are likely to end the year at a little over 3%. That's for 2022. Now, come to 2023, question now will be, can this disruption, even the issue of inflation, and that is where I want to say a little bit. Now, when you look at inflation in Nigeria, it is largely cost push. And that means the only way to deal with that is to ramp up production. So, and then we go back, what has happened to our economy in the last 5 to 6 years? If you look at data on Purchasing Managers Index, especially making reference, I'll make reference at this instance to one done by Stanbic IBTC. Okay, in the last 25 months consistently, the PMI has been above 50. And that points to confidence by the business community and also an expansion within the sectors covered. Manufacturing is there, services, and of course, construction and other sectors. Now, if you look at that, it means 6 months upwards. The expectation is that we are going to still produce in manufacturing. Of course, construction will still continue, and then services, because the non-oil sector has been the major driver of growth in our economy in the last 5 to 6 years. That now is the reality, and I'm happy the government itself also officially, acceded to that. When the finance minister said that, look, we see clearly that the economy is diversified. I've said that for close to 10 years. And we've always got it wrong to say our economy is not diversified. The data proves otherwise. But I'm happy now that officially government of Nigeria has accepted that and put it forward. So where the real issue is the external sector. And that means do we generate sufficient foreign earnings to pay for our external bills? And that is where the real challenge is. So if we are able now to ramp up domestic production, and if we are to rely on what the PMI data says, we expect expansion at least for the next 6 months. Because PMI is based on orders placed for the next 6 months by purchasing manager. So if that is the case, then at least up to June this year, we expect expansion in manufacturing and also in construction, in services, and agriculture as well. If that is the case, then the economy is likely to go the way of seeing inflation moderate in the second half of this year.
Dr. Adedipe, I guess this is a continuous conversation because that second half of the year is when the subsidy is supposed to also be removed from petrol. And so we should also anticipate the impact on that, on disposable income and all of that. And of course, as you have noted, the finance bill is awaiting the president's assent. So we do hope that it captures the complaints that the business community has been having, before it is assented to. But we have to thank you so much, Dr. Biodun Adedipe, Chief Consultant with B. Adedipe Associates Limited, for your thoughts and perspective this morning.
Thank you for having me.
All right, one dreaded topic that is in that finance bill is the issue of tax. Well, we'll see about that deadline coming up very soon here in Lagos. That's after the break, still here on Business Morning. Welcome back. Let's discuss tax now. Well, that's not a very friendly topic for a lot of people and businesses. We just talked about the finance bill, and we saw that the service sector has about 30% of its profits to pay as tax. But let's look at Lagos now, as we have the Chief Compliance Officer of Lagos Inland Revenue Service, Mr. Abidin Akonde, joining us here in the studio. Good morning, Mr. Akonde. Thank you for your time.
Good morning, Ini.
I'm sure a lot of people are not your friend. You guys just want to take our money and take our money and take our money. But tell me, what's the relationship here in Lagos when you talk about tax compliance, both businesses and individuals? What's the relationship and the communication mood?
Now, essentially, Lagos has been very lucky in the sense that, like I always say, the cup is half full in Lagos, not half empty. And we've had a succession of administration that have reformed the tax administration process. And we have engaged the public, that is a tax-paying public. And I can say, yes, we are not where we should be, but we are definitely much better off than most of the other entities in the country in terms of coverage and then in terms of depth of our tax net. So that's why over the years, we had a sort of what you can call a steady increase in terms of coverage, in terms of compliance, and then also in terms of the revenue that we've been able to generate in Lagos State through taxes. And people can see what their tax revenue is being used for in Lagos.
Can we really see?
Yeah.
Well, give us an idea of the percentage of Lagosians, businesses, individuals that are actively paying their tax.
Okay, in Lagos, what we have in the tax net will be in the region of, because don't forget that at the state level, we only deal with individuals, not company tax. So the companies that you have in Lagos that are paying taxes to Lagos are not actually paying taxes to Lagos. They are actually acting as agents of government to collect taxes from their employees and pay to government, to Lagos State. So companies pay to the Federal Inland Revenue Service, to the Federation account. So it's the individuals. And in Lagos, we have between around 5 million taxpayers. But we expect that for a population of 24 million or thereabout, we should have close to 8 million in the tax net. So that tells you the kind of percentage we have. That would be in the range of 60-65%.
Yeah, because we've been talking a whole lot about innovations and technology in the tax space. We expect that to have really expanded the tax, and then perhaps we'll not be having this addition on the finance bill, where, a lot of businesses are scared. If we had those technology really making the impact that is expected and gathering more people into the tax space.
Now, Ine, let me tell you, you see, all over the world, tax administrators have only two basic challenges: the width of their tax net and its depth. Width in the sense of putting all taxable entities, individuals and corporate entities, in the net, and then also the adequacy of whether those people that are in the net are paying adequately as per the law. So in Nigeria, what we have, the main challenge we have is that we have even identity management challenges. So we estimate there are 24 million people in Lagos. Can we uniquely identify all those people? The answer is out there in the field. Do you understand? So, but we are getting there gradually. Lagos has LASRA, Nigeria has NIMSI, and those are the ones that we are partnering with to be able to uniquely identify each and every resident in Lagos. Now, another aspect of it is that who are those taxable? We are not taxing individuals, we are taxing the income or profits of those entities. Income in terms of what you have in your pocket for the individuals, and profit for the companies. But how do you determine that if people don't file their returns?
So that's why we have this deadline that is on the 31st.
Very well. Very well.
So the innovation, I believe, has gotten to, I know in Lagos we've had conversations about how it's now virtual online, so it's easier for people to
because what we have in Lagos for the past, this is about the 4th iteration of this filing schedule, where all filings in Lagos is done electronically. We don't do manual filing. So it is electronic, and it means it's easier to actually work with the figures. Because what the Constitution says, I'll let you know, is that every citizen of Nigeria is supposed to honestly declare his or her income and pay taxes due. So what we are doing is to enable those individuals to do what is right. But don't forget, what the campaign which we are having now relates to only those people in employment. That is it is the employers of labor that will now say, this is how much I've paid Mr. X, Mr. Y. Last year, from January to December 2022, I've paid Mr. A 100 naira. So we file it. Mr. A is expected to file his own returns latest by 31st of March this year. So when he files, he's supposed to declare, from my company X, I was paid 100 naira. Then we can check. Do you understand? So that's the essence of filing, because if you don't have data or statistics, there's no way you can actually get people to do the right thing.
You know, one thing I see here, and a conversation I had over the weekend, is the issue of trust.
Yeah, there's deficit of trust.
Yes, issue of trust. Because if I voluntarily have to do that, it means I trust the system enough to do what they say they would do, so I am now ready and happy to do what I am supposed to do, which is where tax evasion comes in.
Now like I told you, for you to be a citizen of this country, you have subscribed to one thing. And the foundational requirement is that we all believe that we are subscribed to the Constitution of the Federal Republic of Nigeria. And it says clearly that this is what you are expected to do. So the laws that we have, the tax laws, are just riding on that constitutional provision that you must, because it's essentially what you call a self-assessment system. That's the tax system we have in Nigeria, where you will voluntarily say, this is how much I earned last year, and this is how much I've paid as tax, and this is how much I'm expected to pay, and I've paid it. So it's for the tax authority to say, okay, let's look through our books and see whether what you have said you've done is actually correct, and then we can tell you, oh, you have paid adequate taxes, so go home, you get your tax clearance certificate that you have good. Oh, no, there's a short payment of 3 naira, please come and pay 3 naira. Or there's an overpayment of 2 naira, and then we can say, oh, Do you want us to hold the 2 naira for you against your liability subsequently, or we give you a credit for it?
What if I ignore you or ignore all of this?
Then there's a penalty for it. There's a penalty if you don't. Now, the campaign which we are running now, like I said, it's for the employers to declare that this is how much they pay their employees. If the employers fail to declare, then they are liable to 500,000 naira on conviction. If it's an individual, that is, if it's a sole proprietorship that employed people in their shops and fail to, the employees that you have there, your staff, that then you pay 50,000. So it's not about the money itself, but the fact that you have become an ex-convict. And of course, it has its own implications for you as an individual and as an entity. So why do you want to do that? If you have paid somebody 10 naira last year, what does it cost you to just go ahead and declare it?
Well, it's a lot of work for the LIRS for you to start pursuing and finding out you didn't pay, you didn't declare, you know what you are paid. Do you have the ability, do you have the resources to handle such demand? Yeah,
that's why you see, when it was being done manually, it's very, very tortuous and what have you. But now that it is e-filing that we have said you should do. So we know, okay, we have A to Z in our tax net, and we can check about maybe 30,000 PAYE operators in Lagos. Do you get it now? How many operators are filed? Which we can see, of course, the system will automatically throw up those people that are filed and those people that have not filed. So we can see easily, unlike when it was being done manually.
Okay. Yes. So what about if an employer declares less than what they pay exactly?
Now,
you can't go. Are you going to an organization and like that?
Now, you see, the beauty of it is that you see, because what we are doing to do is we are trying to use different sets of information to corroborate each other. So if you have paid me 100 naira and I know it is 100 that was paid to me, so when I'm going to declare it is 100 that was paid to me. But if you under-declare that you paid only 90 naira to me and I said it was 100 naira, then we will know. So once we know, there's the issue of what you can call, there's false declaration. It's different from what you can call an error when you make a mistake. That is, it's not intentional. So there's a provision in the law for that as well, that if you make a mistake in terms of the declaration, the filing that you did, we are now saying it's not, but if you must have a very valid excuse for making the mistake. If you don't have a valid excuse for making the mistake, then there's a price to pay. The price to pay for is 20,000 naira plus double the amount of tax that is due on the under-declared income for your, you understand now? So you pay, if you have under-declared, say 10 naira, and the tax on that is 2 naira, then you will pay 4 naira plus 20,000.
So all of this is supposed to deter people from doing the wrong thing.
Yes.
But one motivation is, let's see what the taxes are doing, then we'll be motivated.
Yeah, the motivation is this, like I keep telling people as well, is in Lagos, you see things are happening. Maybe we should do more of engagement and enlightenment, both by the tax authority as well as the state government, so that people can see that it is not federal allocation that is giving you all the things that you see in Lagos. It is the taxes that are being paid by those people that are responsible citizens and residents of Lagos. So when people see that the roads that are being repaired, the bridges that are being built, the jetties that are being provided, the schools and the hospitals that are open, the schools that were open even when ASU was on strike, it's from people's salaries and income that taxes were paid, that Lagos was able to pay the lecturers of LASU, and they didn't go on strike. You see, it is all this information that we need to put in the public space, that people will know that the government is doing what it should do. It can do more, I agree. But I think it's what we should see in Lagos is that, given the circumstances of our operations here, I think we are doing fairly good, but we can do better.
All right, Mr. Akonde, Abidin Akonde, Chief Compliance Officer with Lagos Inland Revenue Service. Thank you so much for your time. We'll hold you up to that conversation, that communication, you know, to convince the taxpayers that this is what your money is doing. Right. So we need you to pay more.
Thank you. It's Lagos State Internal Revenue Service.
Internal, beg your pardon.
Inland for the federal.
Yes, thank you so much.
Thank you.
Thank you so much, Mr. Akonde, and do have a great day.
You too. Take care. Thank you.
Okay, so it's Lagos Internal Revenue Service. Please pardon my error there. That was the tax master, tax compliance master, we'll call him. And he's trying to convince us that indeed that tax you pay is not for nothing. That is being used for some of the construction and some of those things you see on the road. Guess that should be enough motivation for us to keep paying the tax. But of course, as the media, we're here to always talk to the government and ask them what they are doing with your money. That's why you have us here, and that's why you watch us, and we'll continue to bring those conversations to you. Now, let's talk about yet another aspect of money now, what you did with your money and what it's bringing to you. Well, thank God there's Will here to tell us what's going on with investors' money or what happened last week.
Yes, so basically to give a recap of what happened last week, and we're going to look forward to what to expect in the coming week. You know, inflation numbers are expected this week, so we'll see how the market react to sentiments that will be brought on from the weekend of
and then we also have the MPC next week, so... Yes. I guess that will also be a factor to be considered.
Yes, definitely. But we did see a rise in the Nigeria's forex reserves, which has maintained its uptrend for the 4th consecutive month now. Now, the gross position rose by over $40 million to $37.21 billion, and that's as at January the 11th. Similarly, we saw a rise of about 28%. You know, 28.7% in total turnover at the FX markets to a little above $523 million. This is despite the 34.94% drop we saw in the total derivatives market, which was down, except for the futures, which was up. FX INE was up 53.81% to close at $448.28 million. Now, we saw the Naira. If we look at the exchange at the Naira market, if we could quickly have the Naira exchange there, it was saw a further depreciation in the Naira by 0.06% to close at 461 Naira 29 kobo, which was against the 461 Naira 1 kobo we saw in the previous session. Now, if we look at the fixed income, moving over to activities at the fixed income market, the bond market was mixed last week's trading session. We saw sell-offs outweighing the buying interest, and that's pushed the average benchmark yield up by about 154 basis points week on week, and now to close at 13.22%. Treasury bills market reversed the buying interest we saw in the previous week. The average benchmark yield rose by 453 basis points to 3.46%. Now, we saw also in the OMO bills, average yield remained unchanged at 3.47%. Now, we saw the auction last week. This was a strong buy interest in the short-term instruments. We continued into the new year. We saw downtrend in stop rates, and there was not much going on. The DMO issued about over 56 billion naira, and so stuck to what it offered. You know, there was not a lot. Those we saw a huge subscription for the short term in the long term paper, dated paper. But we have Gafar Bashiru, is a senior associate global markets at Parthian Securities, to give us more insights into what's happening into the market. And looking at the budget deficit, is there, you know, pressure for the government to borrow more? Good morning, Gafar. It's good to have you on the program.
Good morning. Thank you for having me today.
Gafar, you're a numbers person. You tout yourself to be a numbers person. Now, you're seeing the downtrend in stop rates persisting for treasury bills auctions. Now, will this filter into the secondary market? Because we're seeing an uptrend in yields now, yields rising compared to what we saw in previous weeks.
Yeah, so I mean, shortly after the auction that I held last week, we saw the drop in stock rates across the 3 standard maturities. That's 91-day, 182-day, and 364 days. We saw secondary markets react, and we saw a downward trend yield to treasury bills actually from For the long end, that's the one-year paper that trades that closed at 7.3% at the auction. We saw it trade at around 6% and even lower at some point. Although we saw a slight correction by the close of last week. But yeah, market definitely react, and all of the fact market's reaction and the secondary market and downward trend used in the secondary market was largely due to the fact that we had significant liquidity in the system, pending when we saw some CRR data on Friday, right? So yeah, secondary markets in terms of treasury bills definitely reacted in that direction as we saw a downward trend. Going into this week, we might see, as we've seen most of the liquidity got mocked up, or at least a significant portion anyways, got mocked up on Friday with CRR debits by the central bank. We might now see a little bit of correction, but we do not expect rates in the treasury market to increase significantly this week.
Okay, now the 2023 budget is still in focus, and we know that the federal government is exploring various debt instruments to fund the budget deficit. Recently, we saw the SEC, that's Nigeria's Securities Exchange, inviting green bond advisory bids. Now, that's been in the offing, but when this hits the market, how do you think investors will price this green bond?
Well, if the green bond that will be issued by the federal government, this is not the first green bond outing by the federal government. They've had previous issuances in 2017 and I think 2019, a cumulative of about 25 billion of green bond currently exists in the market. And that number I just mentioned would suggest is a pointer to what we would expect in a green bond issuance because of the fact that it's not a very significant volume. It's not a security that trades actively, and as a result, you see investors, whenever there is an issuance of a security that is not going to be liquid, meaning in events where they plan to exit their position, the fact that you do not have many holders of the security would make them demand a premium on the rates, the coupon that the bond could be issued at, right? Usually, you would want to benchmark the green bonds to the FGN, the regular FGN bonds that we have, right? So, say for example, it's a 5-year issuance, a 5-year green bond. That's a 2027 paper. It will be benchmarked to the 2027 FGN bond, and you would see a premium to that. Investors will demand a premium, considering the fact that it's not a very liquid bond. Another factor that investors will consider is the fact is the development or the fact that the federal government's debt has become a conversation in discourse, right? There's concerns over the potential for the sustainability of the federal government debt, and as a result, you will see investors price this sentiment in whatever in the stock price that they will demand for as per coupon on the bond when it's eventually issued.
Okay, Gafara, thank you so much, Gafara Bashir, Senior Associate, Global Market Partners, for sharing your perspective and insights into the market. We'll look out for and track what you've said, and see how that pans out later this week. And so, Ini, the all-share index for the NGX, you're saying that 2.52%.
That's 52,000.
Yes, that's a good one to start. Well, coming into the week, we're hoping that's a good start for the week.
Yes, we hope that profit-taking will not...
here, because they predicted profit-taking. But I just hope the investors will be calm about it, not rush.
If you're an investor, what will you do? A big question. All right, thank you so much, Will. Let's head over to London now, where Juliana is standing by. Juliana, good morning. I see you've been very busy today. Saw you on Russia invasion, and now you're here. It's a busy week for you, Juliana. And then now we have this public order bill. The strikes are getting knocked off. First of all, we had the anti-strike law. We haven't heard the last of it. And now we have the public order bill.
You're absolutely right. Good morning, Inni. Inni always working much harder than me. I must put that out there. But yes, this new proposal is going to go through line-by-line scrutiny when it is put to the House today by the British government. And basically what this public order bill is likely to do is provide the police in this country enough powers to stop protests if they are likely to cause widespread disruption. Now, the timing isn't right because you quite rightly said we've got anti-strike legislation currently going through significant debate in the House. But to be honest with you, I've got to say, I think this public order bill is likely to have the backing from the British government. Why? Because there has been lots of widespread disruption in the past few weeks and months, mainly by environmentalist activists such as Just Stop Oil, who've been going around basically gluing themselves to office buildings, to government buildings, gluing their hands and their feet to motorways in the middle of rush hour, not only stopping people from getting to airports, but actually stopping ambulance staff from getting very, very sick patients to hospitals. Anybody in the UK knows there have been some significant clashes between beleaguered commuters and some of these environmentalists. In fact, some of members of the public have actually been taken to court for physically, lifting pretty elderly people up from the roads to stop that. When the police come to these situations, they usually don't know what to do because, of course, it is legal to demonstrate. So that is basically what this law is going to do. It's going to give the Metropolitan Police and Scotland Yard more powers. It has been largely welcomed, but of course, trying to limit just how much and how vocal protesters can be, is going to cause some concern among some of the government's opponents. But I think quite widely people want to see the end of the pretty disruptive Just Stop Oil protests.
Well, I guess the bigger picture, Juliana, will be to stop the source of those strikes in the first place, but that's in a longer term. What are we expecting? Any datas for the week?
As you said, it's going to be a busy week for us in London this week, but away from the politics, because we do have Peter Obi speaking at Chatham House at lunchtime. It's all economics, and it's all economics at a time when the health and the wealth of this country is deteriorating quite drastically. More strikes, as you just mentioned. The big one is got to be the Royal College of Nursing strikes. They are going to be striking on 2 days. I believe that is taking place on Wednesday and Thursday. They still have not reached an agreement on pay and working conditions with the British government. That's going to cause huge disruption for people who are already battling with trying to get an appointment at their local hospital or GP. And then there is a slew of data. Unemployment rate due tomorrow. Unemployment currently at 3.7%. Economists think it's going to stay that way. Very, very important data on Wednesday. Inflation, double-digit inflation. One of the reasons why we're having all these strikes is because it just costs so much to live in this country at the moment, or to live a decent life. I think economists are expecting that to have dropped to about 10.6%. Usually we have to wait and see, so we shall. And then on Friday we get retail sales data, which is important. It's always a nice temperature check on the state of the British economy, because of course if retail sales are down, that's because people are not spending. People won't be spending because they're just not confident enough to top up their typical weekly outfits, or going out with friends. So yes, it's all going on, it's all happening, but strikes remain the topic of discussion in the UK at the moment, Tinny.
Yeah, Juliana, you're very busy. I said it. So I'm sure we'll see you around noon when Peter Obi is at the Chatham House, and then of course we'll talk to you at 1:30. I hope you have time for us for Business Incorporated anyway. Well, we'll see how it goes.
Fingers crossed.
All right, so let's head to the crypto space now. And Ladi comes in with a big smile because over the weekend we saw a Bitcoin hit that 20,000. I was like, could this
21,300.
Oh my word, could it be? I can't remember the last time I saw that.
Yeah, and it's interesting. We started this month about $16,500. So in about 15 days, we've added about $5,000.
I'm still going to hold my breath. It's too early. It's too early to exhale.
Yeah, but January is looking good, and hopefully, it stays that way. Yeah. And if you're talking about sentiment now at 45 points, we've been at the extreme fear level for the longest time, but now we're getting to greed, because over the weekend, the sentiment did get to neutral. That was about 50 points, talking about the sentiment in the market. Let's look at the market cap this morning, up 2.17%, very close to that $1 trillion level we're used to in this market. We did lose that point there, headed to about 800, almost lost 800 billion, but now we're above 800 billion, deeper into 900 billion right now. Volume traded down 22.14% this morning. And we see Bitcoin dominance sitting at 40.95%. Let's look at the price of Bitcoin now this morning. See that $21,119. Didn't get to that resistance, that major resistance level of $21,500. It stopped at 21.3, but it's up 2.02% this morning. We see big volume coming in with the buying pressure we're seeing in the market, $22.17 billion. Let's look at Ethereum now. That's not left out of the party. $1,569, up 2.95%, about 3% this morning. We see Ethereum also getting some buying pressure there, $7.22 billion. Even though we're seeing kind of a pullback from the highs we saw earlier. Let's look at the top alts by market cap there. We see it's big green numbers we're seeing there. Matic there, crossing over $1, up 5.36%. We see XRP also trying to stay above that 30 cent level, 39 cents, trying to get to 40 at this point. And we see BNB broke the $300 level, 2.25% up this morning. Let's bring in Solomon Amunde now, financial market analyst. Hello, Solomon.
Good morning, Ladi.
Good morning, Solomon. And obviously, it's been a good weekend for Bitcoin, and Monday is not looking so bad. But I'm guessing, the U.S. markets are closed today for that, holiday. We're not seeing that much volatility in the market. But what do you think happens when U.S. markets open Tuesday?
Yeah, so basically, right now, Bitcoin is still at a very critical point where it's sitting at about $8,800. And already we have so many persons feeling extremely euphoric about the market, and they are actually sentimentally bullish currently. But if you ask me, being very idealistic and sticking to the fact what the chart is saying, Bitcoin would have to make a brief correction. Despite the US market opening tomorrow, it will have to make a brief correction to fill the CME gap at around $18,000 and $19K. Now, failure to do that, we might see BTC pump to about $22K, but the dump would be quite massive afterwards.
And what do you think is going to lead that dump? What kind of data do you see, coming on the global scene that's going to bring Bitcoin down from this rally?
Because generally speaking, we are still in a bearish market based on macro and micro analysis. We're still actually in a bearish market. As long as Bitcoin stays below $29K, we're still very much in a bearish market. But we have some very positive news this year that have made the price of Bitcoin to appreciate. Like looking at the FTX issue that made Bitcoin dump to about $15K. So far, FTX, they have been able to recover about $5 billion of investors' funds. So, that means something. And if you see it also reflected in the FTT token, gaining about almost 100% of its price. So these are some of the things that made Bitcoin pump. But these factors are not something that you can hold on to for so long. It's just a matter of time, and we'll go down again to about $19K.
All right. Well, seeing euphoria in the market, at this time, let's see if that euphoria actually continues to the end of January. Thank you so much, Solomon Amunde, financial market analyst. So, that's how the market is looking. There's euphoria right now. Everyone's happy in that market. The investors seeing Bitcoin, looking quite strong, but it did miss that $21,500 resistance level. So who knows what's going to happen next?
Yeah, I'm not happy until I see us back to that $1 trillion market cap.
Yeah, the $1 trillion.
That used to be the norm.
Yeah, it was the norm, but yeah, we lost that level. With all of those.
All right, Laddie. Thank you so much. I guess you're back at 1:30 for Business Incorporated. Thank you so much. Right. Well, that's where I will draw the curtains on the program this Monday morning. But never fear, it's 4 more days to go for this week. But I'll see you at 10 p.m. during the stock market report to give you updates of how the market fared today. Hopefully, we'll still sustain that bullish sentiment and keep it to the close of day. But until 10 p.m. and, of course, tomorrow morning, again, I'm John Mekwa. Make the most of today. Make some money.